So number one, if you missed this video, I'll post it to my social sites. It'll be on my Vimeo site. It'll also be on YouTube, or you could just rewatch it here. So first and foremost, we have I had a deal going on. If you want to try my video service free for a month, I'll extend it today because I wanted to include that offer in this video. So if you want to subscribe for a month for free, there is a link in my Twitter account with the promo code FREE. Secondly, we've got a lot of stuff behind us and even more in front of us, so I wanted to do a little bit of an update because we had talked about this the last couple of weeks. So we still have the COVID lockdowns going on in China, which is problematic. We still have the Ukraine-Russia situation, and Putin put in that artificial deadline of May 9th, which is a significant World War II anniversary day for Russia, and there's the theory and threat that they could potentially use a tactical nuke or chemical weapons, which I think would put the markets back into some massive disarray and potentially ruin the thesis of energy having peaked. But we'll have to see if that's the case or not. We know the Fed is still going to be hawkish. I'm still thinking that they may do the 0.5 point at the next meeting. The Bullard comments about the 3/4 point seem very unrealistic to me, and I'd be very surprised if that were to be the case. I don't think that will be. I'm keeping an eye on some key market levels. I want to see if we can hold 50% and then maybe clear 61/8. And more importantly, I think we need to address the earnings situation that is upon us. Now, we just had a couple of massive earnings announcements, and they've gone in some different directions. But I want to start out with some smaller ones that I don't think people were paying attention to. One was JB Hunt. And that was a pretty decent number, but the stock really didn't go very, very far. It had been down a lot, but it didn't really rebound enough. And the same with CSX. We're going to have to see how that report plays out. The stock was up a little after hours. That's often a canary in the coal mine for me. It closed at 35.30, and it's only in the 36s, so it's up a little less than $1 in the after hours. I want to see how that handles itself. But more importantly, I want to see how the market dynamics are that we've talked about endlessly lately in videos. The last earnings season, we had a situation where stocks that reported good numbers would pop. They'd be kind of smallish pops. And then within the next few days to a week or less, they'd give it all back. And then stocks that were down crashed and then just kept on crashing. And we have an example of that here, potentially again with Netflix, which was oddly enough one of the ones the last earnings season. I think the Netflix issues are Netflix issues. I don't think that they can be dragged across to all the other tech names, although they certainly did today. Facebook and Roblox and those stocks that got pounded the last one, I think people just extrapolated that they're going to be down huge again too. And oddly enough, if they're down big already into their numbers, it could cause either for smaller declines if the numbers are bad or larger rallies if they are good because you've gotten out some of the weak hands. I think the key now for Netflix is going to be to see if it can recover or if it's just going to continue down or just kind of chop sideways. My thinking is it could continue down a little bit given what had happened the last time. I also think the last time Bill Ackman jumping in buoyed the stock for a while. I think that gave a lot of investors confidence. I had said I didn't think that would give me confidence. Ackman's not the kind of guy that you want to follow in. He doesn't kind of have the gravitas of a Warren Buffett or a Carl Icahn or investors of that ilk. And if anything, Ackman often is a fade. He's had a lot of very notorious blow-ups, Valiant being one of the prominent ones a couple of years back, and then he had the Herbalife one, obviously, also was a big one. So I'm curious to see how the market dynamics play out here. Now we have another example of one with Tesla that had good numbers, and the stock is up after hours. I'm looking at it now on the charts. It's oddly enough not up as much as you might think. The expected move here from Tesla was, let me just hammer that up. I thought I had it up already. $83 on the snap, and it is up nicely. It may wind up doing that in the after hours, but I'm curious to see if it can hold on to the gains and maybe build them, or if it's going to just be a smaller move and then give it back. I would say for me now, the key levels for Tesla that it would need to hold would be above the high of day, the RTH high of day from yesterday. We don't even have to go back to yesterday. Let's just go back to today. The RTH high of day was 1034, and the pre-market was 1037.51, which it currently is roughly around now. And then on the spike high, I saw two key numbers of 1023 and 1026.88. So anything above those levels, I would say, can stay long. Below those, you might want to even try short or, use a stop on shares. So I'm going to be curious to see how that plays out. I had talked with a few subscribers about how I thought this would play out, and I said, I thought that it had been in a range. It moved itself to the lower end of the range, and there could be some big downside risk. But I had said I thought that the upside risk was probably there. I mean, it was definitely there. I thought the numbers would be good and that there could be up, and I actually thought the stock would be up, but up small, which it sort of is now. But I thought that the asymmetry of the risk could be potentially for the downside and to be the second mouse. And if you're playing second mouse strategy, you want to make sure it's above the pop high of the after hours high. Now, the question is how the stock is going to trade tomorrow. So what I'm looking to see is where the stock opens, if it's above or below the overnight high. If it's above, you could be playing long with a 5-minute low stop, the opening 5-minute low stop. And if it's below the overnight high, you could be playing short with the opening 5-minute high as the stop. Presumably, if you get over the opening 5-minute high, it would be long, or below, there could be more pullback because people, book profits initially. So that's one of the things that I'm looking at, and that was also something I had talked about in the midweek video with regard to with Netflix. I had said that I thought that it would go down to the 1050s. It did. It went even lower. And I had said that the question was going to be, would it be opening higher or lower than the overnight low? It wound up being lower. And then anything below the opening 5-minute low was a short, and it just kept on dumping. So that's a strategy to use when you're dealing with gaps, the opening 5. Or if you want to use the opening 15-minute rule, that's fine too. If you're already in the position, I tend to like to use the opening 5 for sure. But if it's if you're not in it, or if it's a little choppy in the open, or if you want to give it a little bit more time, the opening 15 is fine too. I know traders who use both methods. I often use both methods as well. So that's sort of what I'm thinking. And one of the reasons I think Netflix was down, by the way, was this woke agenda that they continue to push. And even Elon Musk called him out on it today. He tweeted out about that. So that's something to pay attention to as well. A lot of companies like Disney, for example, now Florida is looking to strip them of their special status and potentially taxes. And this woke agenda, I think, is going to hurt a lot of companies. Will it hurt Facebook as much? I don't think so. It's not that I'm saying I don't think that there could still be a potential move down in Facebook. There's always that potential if there's not good news on their quarter, and particularly if they were able to kind of get around some of the Apple barricades that were placed in front of them. But if they, if they got around that or not, I would be very surprised if Facebook gets hit as hard as Netflix, given the fact that they have different types of businesses. It's not a subscription-based model. It's obviously a free platform, and whether you're, home dancing, posting videos, or if you're going out and traveling. And I read something like 80% of households have not been on vacation in the last 2 years. So I'm thinking travel stocks are going to benefit from that. Booking, Airbnb, Expedia, and the like. And we just saw UAL come out, and they were saying that they're expecting some stuff to be very good. They were actually saying that they think business travel could get back to 2019 levels, which to me seems almost impossible at this point with Zoom and the amazing cost cuttings that there have been. But I do think that there's going to be a lot of travel this summer, and I do think that particularly with the mask mandate now being repealed, I think those kind of stocks are going to be good. But Facebook will be, you post your vacation photos. It's not like you can post your vacation photos to Netflix. So, and Instagram and so on and so forth. And if you back out some of the valuation of Instagram, you know, it's a very, very cheap stock. So I don't think that there would be necessarily the same parallels there. We'll have to see what the sentiment is and, of course, where the stock is at the time. I tend to think it's going to trade sideways from here, maybe back down to like 190-ish, maybe back up to like 115, up 215, 220. But I think it's going to be in that range for a while, and they report next week. I'm also going to be very curious to see how the unionizations that are seemingly happening in Apple and Amazon are going to impact them and the guidance they give on the quarter. I think the supply chain, this is kind of the tough quarter to get through with regard to the supply chain, so I think guidance is going to be everything. And I just saw that some headlines that there might be some guidance issues in Tesla. Actually, the stock's pulling back a bit, but like I said, 1026.88, 1023 is the must-hold levels there. Does anyone have any questions or anything they want to discuss? If not, we could wrap it up here. This was kind of just meant to be a quick little video and really how to trade the gaps. I think that that's been most of the questions I got today were on you know, what to do and how to do it. And maybe if you're a swing trader, you want to wait the 3-day rule or even 5 days in some instances from after one of these blow-ups in one of the stocks. I'll tell you, if Netflix is down big again in the morning tomorrow, like let's say we get 195 or so, I'd be inclined to maybe sell some out of the money puts, maybe around 150, 160 if I could get some decent juice on that, or maybe even scoop shares for like a quick 5-point or 10-point bounce. So that's sort of what I'm thinking there. For, you know, there could be a little bit more continuation, but maybe we do see a little bit of a bounce just for, you know, a day trade situation. But in general, if you're looking to swing, I usually like to give it a few days to kind of wash out. You know, most of the de-risking and the puking that goes on doesn't usually happen in just one day. It usually takes a few sessions. And then you also have to get through the Friday option expiration with the pinning and so on and so forth. And I think it'll trade a little more freely next week. So I think we'll wrap it there unless there's any questions. I'll give it a second or anything anyone wants me to comment on. I think the blow-up also, by the way, in Netflix could benefit Paramount, which trades at a single-digit PE and has a decent dividend. So and maybe they're taking subscribers. I think that's what's happening here. So I guess we'll wrap there since no one wants to say anything. Alrighty, guys. Have a great rest of your week. I'll see you for the weekend video. If you missed the midweek video, I suggest watching that. Those levels are all still relevant. And if you want to take advantage, I'm extending the free month till midnight. I'll expire at this midnight. So I guess I'll use West Coast time, so it'll be 3 a.m. New York time, and then 12 p.m. California time. I'm in New York, but I know that I have a lot of West Coast followers and so on and so forth. So I'll give it a little extra time. I don't know if it's the price increases really that hurt, you know, Netflix. I mean, maybe on the margin. I think it's the woke content, frankly. I know everyone I know is complaining about it, and I think that's going to hurt Disney as well. But yeah, I mean, any price increase probably doesn't help. And now the fact that they're talking about going to the ad-based model tells me that they're out of growth. They're out of runway. So now they're reaching down into the lower quality type of subscribers, and they're looking to, you know, do ad-supported models. I guess Paramount is doing that, Peacock's doing that, and other networks. So, you know, if you're paying $4.99 or $5.99 a month, it's a lot cheaper than, you know, $15 or $17. I mean, to me, I mean, I don't know how people are so price sensitive. If you went to the movies, you know, if you went for 2 people with popcorn and beverage, I mean, you're talking about $50, $75 per movie. So I paid for a subscription. Why not? So they're going to probably go to a hybrid model, is my guess, sort of like what Paramount does and what Peacock does. You could either pay for no ads, you pay the full freight, like $15 or $17 a month, or you get ads and it's $4.99 a month. And you get access to there, but you have to watch ads, you know. So it's just it's sort of more like regular TV, except it's streaming. And Netflix, of course, has been resistant to that. So we'll see how that plays out. But I don't think it's the price increase that hurt Netflix. I really think it's their woke content. I myself am like, I got to unsubscribe from these people already. It's just, it's insulting. So I think that's really what happened here. Anyhow, I'll see you guys for the weekend video, and have a good one. Cheers.